Welcome back to the show, Laura.
Thank you. Thanks for having me.
All right, it's that time of the year again. When is that? It's end of financial year, March 2025. When was the last time we did these videos?
I think it was around this time last year, maybe a little bit later in the year, July time.
Yeah. Okay. How time has gone by so quickly now.
Yeah, and I think a lot's changed in that time as well in the market. So
The biggest change is interest rate.
yeah,
All
finally
right.
on the down.
Let's talk about it. How to secure the best interest rates as a property investor in the current market.
Yeah.
Hit me.
What you will generally find is that every bank will have a set of interest rates based on your LVR. So as long as you're under 80% LVR, you're going to be getting those discounted interest rates, which at the moment we're pretty much seeing like low fives, high fours. A lot of banks have got 4.99
For 2 years though.
Yeah, pretty much
Right.
for 2 years. Only one bank, TSB, they were doing it for 12 months.
Okay, so low fours, that must be for like 2 years.
High fours. So yes,
Oh.
most banks are offering 4.99 for 2 years, but 4.99 is essentially 5% interest. Just because it starts with a 4, a lot of people are being attracted to this 4%.
Oh man, you're right.
4.99 is basically 5%. And if you're looking at what the current 12-month rates are, they're 5.15, 5.19. You're then fixing in for 2 years at 4.99, call it 5%. On a loan of 500,000, that's about $25 a fortnight's difference.
Is that all?
Yeah, but you're delaying yourself an extra year of being able to roll onto any further rate cuts that will happen in that 2 year period. I would quite comfortably say that in probably 6 months' time, even less, the 1 year rate will be under 5%. So if you're locking in now for 2 years, you're just basically sitting there for 2 years on 5% interest rate, when in a few months' time you could be at 5% or under.
Okay, that makes a lot of sense.
So we're seeing that a lot. A lot of people are saying, "Oh, I've seen this 4.99. I'm being offered 4.99. I want to lock in for 2 years." Now isn't the right time to be doing 2 years.
What about 1 year?
Yeah, 1 year.
1 year versus 6 months.
Yeah, so the 6 month rates are currently sort of 5.79, 5.69. When you compare that, again, it does come down to like the loan size. On larger loans, 500,000 and over, that's when it starts to make a difference. But sort of 500 and under, there's not a whole heap of difference in your repayments on 6 versus 12 month rates. You also have to consider your own personal situation. What's going to happen in that 6 to 12 month period? Like, are you, do you know of any pay rises? Are you planning on like having a family? Are you planning in any overseas trips? Is there any large kind of outgoings? If nothing in your personal position is changing, then you might want to look at kind of hedging between 6 and 12 months. So splitting up the loans, putting some on 6, putting some on 12. So yeah, it really does pay to kind of look at your personal position as well as what's going to happen in the market as well, because what's right for one person isn't necessarily right for another person. But yeah, I would say 12 months at the moment is a good option, definitely. You would probably just have to accept that during that 12-month term, rates are going to come down again. So you might lock in 5.15 now, and in 3-4 months' time, it might be under 5%. But that's better for sure than doing it for 2 years.
Yeah. Okay. Thank you. I really appreciate you giving such a straight answer, because most people are too scared to say these things on the internet.
No, honestly, I'm seeing this so much at the minute, and it is just a psychology thing. People are seeing like, oh my God, 4% interest, but it's not. The 4.99 is basically 5%.
I'm a sucker for that one. Yeah. I tell people that's, $499 is $400. All right. Thank you, Laura.
Okay.